This is a business that this is owned by your 401k plan. Again, it's all the intent to create tax-free money. And my objective is I want tax-free money on all areas of my life. How do I do it? All of these programs put together accomplish it. I want it in real estate. I want it in business. I'm 21. I want it now. This is the now generation. Okay? I can show a 21-year-old by 26 they can make $10 million, have it tax-free, say I'm done with working for the rest of my life. It can be done. So the objective is to use your 401k plan to do a business. Benefit here is I can go buy a McDonald's franchise. I can go into the franchise and receive a salary. I can receive fringe benefits. I'm working for the company. I'm just like a regular employee. So it's like, yeah, it happens. The whole entity happens to be owned by my 401k plan, which I'm not supposed to do that. With this mechanism, you can. The IRS doesn't like this mechanism. But again, it's covered by the Department of Labor, which says, I don't care what you like, IRS. We're doing it this way as long as we control pension plans. Okay? So the IRS we have a set of rules that we have to follow, and the IRS scrutinizes those. You can grow a business as large as you want, fast as you want. There are no limits on how much a 401k plan can make in profits. There's no limits. I can make $1 million, $10 million a year. It doesn't matter. And one of the ways I use to do this is what's called turbo growth management and analytic metrics. What this is, well, let me see. What this is basically this I developed when I was with an Inc. 500 company, and I didn't know what anybody else was doing. So I just developed, it wasn't called this, it was just a weekly meeting. What are you going to do for the company this week? And then the next week, what did you do? It wasn't me telling you what to do. It was you said you were going to do it. Either you did it or didn't. But from you telling me, going around the table, I understood what everybody in the company was doing. I was in finance. I needed to know if you needed money or whatever that affected my job down the road. That's one of the reasons I set that up. The byproduct was the mechanism created a whole unified team. We went from zero to making, I had $1 million in the bank. I had nobody to pay. I had paid all the bills. I even paid the owner some of his loan, which was in violation of a small line of credit I had with the bank because I didn't have anybody else to pay, and we had this money sitting around. So I paid the owner. That violated that covenant. The bank called the loan. I said, this has got to be crazy. I've got more than enough money to pay that loan. Just, rewrite it, overlook it, do whatever you need to do. It's just logic. No, we're calling the loan. I escalated it up to the boss, and nope, calling the loan. And finally, we had a meeting at the lawyer's office. Last chance, you're gonna rewrite the loan or do something? Nope, call the loan. Okay, here's your check. Now why do we need you? We don't need you anymore. because this process grew us we went from 0 to 18 months, we had $1 million in the bank. We were waiting in cash. And not working. Believe me, I wasn't even working a 40-hour week. I mean, it was just super easy. What I've subsequently done is look at analytics. Is basically, I don't want for me to guess what I need to do to fix something. I want the company to tell me what area I need to fix. And this is what this will do, is it will say, Ken, your receivables are exceeding your target rate, or they're getting out of balance here or there. And I know that Ed is responsible for receivables, so I go to Ed because it's showing up when I run this analytics. Ed's area is showing up in red. All I need to do is take care of the red stuff. The green stuff, good to go. The yellow stuff, I have to kind of watch it, but it isn't into red yet. It's the same as it was before. But the red stuff, that's where I need to focus. So this will tell me where I need to focus. Because I have the turbo growth meeting and going and everything, it will provide me the forum to simply say, Ed, where are we at on the accounts receivable? You know, what do we need to do? Because if we do that, we have orchestrated the company to grow it larger, faster, and we also, with this mechanism, we have taken the know-it-all out of it and the ego. It's just numbers.
So you set it up like a system.
It's totally a system.
Once you set it up, just all you have to do is maintain it.
All you need to do is maintain it. And what happens is, like I said in the earlier talk, I want more. You know, okay, we grew the Inc. company at 400% a year for 5 years. Why couldn't we do it at 500? You know, so it's like it was a family company. I was the only outsider. It was all family, so I couldn't criticize anybody. But and you sell the business in the future, you pay no tax. My 401k, Roth 401k owns it. I don't own it. And that's my whole plan. My goal is to grow it, to start something, grow it fast and big, and then simply say, I'm done. Okay? One thing I found is basically you think, well, I'm going to be out of work, I'm not going to have anything to do. When you start doing this, you will start throwing off more and more ideas and opportunities, more than you could possibly handle. So it's like, if I sell this, I got probably 10 other projects to do that I want to do. It has a lot of advantages, okay? Basically, I can use this in conjunction with the other factoring. And when I'm in a high growth company, generally no bank is going to finance me for the high growth. So I have to figure out, how do I do it internally? How do I supply me with enough money to grow at a hyper growth rate? Or what is my system to grow at a hyper growth rate? So basically, that's my job. And again, because this is in my 401k plan, I can sell my receivables that I create in this company to my 401k plan at a discount. So essentially, I'm double dipping, really.
The IRS says it's okay.
Yeah. To a certain extent, you look at the tax law, very complicated. But when you look from a standpoint, okay, I want to make a lot of money. Tax law doesn't say anything about that. I don't want to pay any taxes. Okay. You kind of have to pay taxes on this income if you earn it here and here and here. Well, what happens if I earn it over here? Well, you don't have to pay tax. So your job is, what do I need to do in the areas where I'm going to have to put money on my tax return? How do I keep it low? And then there are systems on real estate where I can have personal real estate and compute a way to depreciate that property called cost segregation, and lower my, increase my depreciation, which will lower my taxable income. And so it's like I can front end load my expenses in certain ways. If I know how to do it, I can do it before I complete the deal or after. Preferably before is better, cheaper. Most of the guys that do that are in tune to doing it after. Here's the IRS view. It's really covered by this exception. So basically, on ROBS, I need to run that business as a C corporation, which is a C corporation pays tax. So if I make a lot of money, I'm going to pay tax at the corporate level. But if my plan is to take a company and grow it as fast as possible, I'm going to take every dollar I can possibly get and reinvest it in that company, which is going to throw off deductions. So my profit should be kept relatively low. But at the same time, my growth rate should be kept quite high. So that's my job. Worst case scenario is I make a lot of money and pay a lot of corporate tax. But my whole game is to grow a very big company and sell out where my sales price is never going to be taxed. I'm currently on this area and the next one I'm going to touch on, currently doing a sale of just an ordinary supply company. Purchase price is set at $10.5 million. If he would have done either one of these, he wouldn't pay tax, but he didn't. And so he's paying $2 million in taxes on the transaction. You know, so it's like you're still making $8 million or so, but you could have kept another $2 million in your pocket if you learn to structure things right. Here's the structure that you can use. Is basically you're taking your regular, converting this money over here into the 401k money over here, because I need that to do the ROBS corporation. Then I'm forming that corporation here, okay? Now, I've got money over here, but maybe I don't have enough. Maybe I want to buy a company that is a lot bigger. So I bring in outside investors. I can do that. They own a piece of this company. And this area over here could either be out of his retirement plan, just like mine, or on the next segment, it'll show you how somebody with their own private money can not pay tax also. Then the owner can receive a salary, benefits, while running the company. My salary is what I determine I want as a salary. I'm going to pay tax on it. Income tax, Social Security, Medicare, whatever, but I'm going to pay tax on it. But it's my salary is what I want. Okay? Here's kind of the process graphically. Not a complicated process. It's just a different process from what normally businesses do. And I think pretty much everyone's going to have to agree, most of this stuff is pretty much straightforward, but it's just based on tax law or the holes left in the tax law. Here's when you get done, okay? I got a business buyer down here. He's buying my company. I'm not selling it. It's going back up into my retirement plan. Now, unfortunately for me, I'm over 59 and a half. From this standpoint, that's a fortune. I can make $1 million today. I can go into the bank tomorrow and take it out, tax-free. Because basically, you know, Ken Lindau doesn't own anything. Ken Lindau's Roth 401k plan owns his stuff. So basically, that's the game you're in. Okay? After 59 and a half, you can make as much as you want in your Roth 401k plan, and it's all tax-free. And you can get it tomorrow.
As long as you've had that Roth for 5 years.
Yeah, you have to have the Roth for 5 years. So if you don't have a Roth 401k set up, put $100 away for it. You have to have a time clock started, and that $100 starts the time clock. So when that, you know, I can put any amount on top of that, but that clock starts with that first dollar. There's no capital gains when I do this, no alternative minimum tax. If a stock was owned by the regular 401k plan, I've deferred the tax, not avoided it. Okay? To avoid the tax, I have to take and pay tax on my seed. Whatever money I need as seed to start this whole ball rolling, that is the money I have to pay tax on. Once I pay tax on that seed can grow as much crop as it wants. There's no limit. If there's any tax effect down the road, I anticipate them to limit the profits that you can take in the retirement plans. Very similar to what they did, if you look back, what they did with Social Security. Social Security used to be non-taxable, totally, everyone. And then they got wise, if you make a certain amount of money, you're going to tax your Social Security. A little bit of an outroar then, but it's still in place. That's the only thing I see them doing in these areas. Disadvantages, additional cost, setup cost, year-end tax funds. I have to file a corporate tax return. I have to file some 5500s for my pension plan in addition. Additional tax compliance, possible IRS scrutiny, if, you know, down the road. Like I said, I've never had any problems with the IRS on any of these things. Requirements, they created a list of the various things that you need to qualify, do to make sure that you stay within the tax law. Setting up a qualified plan, setting up a C corporation, reporting on an annual basis to the Department of Labor, your 5,500, adhering to all the tax reporting. Remember, you just got a corporation, so it has to pay payroll taxes, corporate taxes, everything that a normal corporation does. How does this help you? Pretty much can see, shelters your retirement assets. Everything's in my retirement plan, not subject to outside creditors. Your business assets are no longer subject to the creditors. Provide better investment. I can get a better return out of this stuff. Provides a way of setting up a business where you're not going to pay any tax on the sale of it. So I don't have to worry about how much, I don't have to worry about that $2 million that my client's going to have to pay on that sale of their business, his business. Here's the fee for setting it up. Basically, I charge $3,500 to set it up. Corporate tax is about $1,500, and the annual $5,500 is about $370. The turbo growth. What I find is, if you want to succeed and you want to execute into a high growth company, I haven't found any other rational reason to do it. Like I said, if you run into egos or know-it-all attitudes, those are just deal killers. So basically, if you want to grow something, this is all logic. Sound reasoning is we're playing as a team. You're no different than a sporting team. Everybody has to do their job and play cooperatively with all the other team members to execute with a one goal in mind: high growth, high profits. If we do that, then everybody wins. If we push back on doing that, everybody will lose. We have a number of companies in that same boat. You know, $2 million company that they will not listen. And we have tried for more than 2 years, but they're hell-bent to take it into bankruptcy. That's my information. Generally, I get calls from everywhere. Do this across the country. So if you have any questions, need any help, let me know.